BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top trade. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi. Hello everybody, welcome back. Let's have a look at the charts. Just focusing on Bitcoin, Saturday morning. Well, I suppose it's late morning, isn't it? Did a stream last night, and my expectations for Bitcoin on the very short-term timeframes are still coming to fruition, which is that we are in a 1 hourly time frame. We are looking at a retest of that 200 simple moving average where we've been rejected bang, bang, and bang. So that currently brings the price to basically 68,300, and with every hour that goes by, a little bit less. This is, well, it's a pretty nasty drop, really. So what we had is a death cross and a death cross, and obviously the drop took place before the death cross. So and again, it's only an hourly, so let's not get too crazy. It was more about the drop from the formation, this ascending triangle. I know this is a noisy chart. I know it's quite loud. And that can upset a lot of people. In fact, what I'll do is I'll just tone it down a little bit. We'll get rid of the itchy cloud. I know that upsets people. But what we're looking at here is the drop from the ascending triangle. So that was a bit of a shock, obviously, a bit of a surprise to see that, because this is supposed to be more bullish than bearish. Remember when I say the word more, it's more likely to be bullish than bearish. It doesn't mean it is a bullish formation with a guaranteed outcome. The reason it's bullish rather than bearish is because the supports are getting higher each time. That forces you into receiving higher lows, and the resistance is flat, which means that, you know, if we're going to gain momentum, then the chances of creating a higher high at some point is more likely. Not in this case. It was more likely, but it didn't happen. There's you know, it's nothing is a slam dunk in this world. Trust me, it's not. Right, so what we're looking at on the 4 hourly then, I suppose, is the bottom of the range and a 200 simple moving average, sorry, exponential moving average, which is, I suppose, a retest of a degree. You know, it's not perfect, neither was this one, nor was this one, but it still has on the 4 hourly generated a higher low. So we're not broken bearish, not quite yet. Not on the higher term time frames, not on the 4 hourly at least anyway. And since the last couple of days we've reclaimed the Bollinger Band, we've retested the Bollinger Band as support, and now it's got an upward slope on it. So it does look okay. It really kind of does look okay. This 50 exponential, the 50 simple, which is this little skinny purple line here, is basically doing the same thing that the 200 simple is on the hourly, and it's giving us the same resistance of roughly about 68,000 to 300. You know, we're dealing with big numbers at this point, so little fractions of percents do equate to hundreds of dollars at this point. So right, you're all wondering what's going to happen next, as am I. So looking at the MACD, we had a nice cross down here, and we are diverging up towards the 0 point. We're above all moving averages, like I said, on the 4 hourly, so it adds more weight to the idea that this is actually going to move up. On the 4 hourly is better than an hourly in my opinion, because it offers larger moves, as the daily offers bigger moves than a 4 hourly, the weekly offers even bigger moves than a daily, and so on and so on. This is all how it generally works, really. So what we're looking for now is, okay, the 4 hourly looks good, the 1 hourly is having a bit of a battle. What's the daily saying? So the daily basically is having a little bit of a fight in between a very tight range, being the 10 exponential, 7 simple at the top, and the 21 exponential and the 20 simple at the bottom. So that gives us a support range of 67,750 and a resistance of 68,100. So again, those numbers for resistances are a big deal. 1 hourly, 4 hourly, and even the daily all pointing to a very, very tight area at the top of more or less where we are right now, and if we were to break and close above that, obviously each time frame needs a closure on those areas. So daily needs to close above there tonight, yeah, that was tomorrow morning, and so on and so on. But I have to say, standing back, looking back at it right now, still a bullish chart. But, you know, we are pushing resistance, so remember that. You're watching this video, whatever time you're watching it. I'm making this video on the 6th of April at 10 o'clock in the morning. And that means that there's a whole day to go now, where a 1 hourly can move anywhere. So can a 4 hourly, a daily, and whatever. So I'm telling you, resistance areas, and I'm telling you support areas, and I'm telling you validation and invalidation of those areas. I'm not making an absolute call right now. It would be kind of crazy and silly to do that because we've not broken out from the resistance. So whatever I decided to use as some kind of clickbait to draw you in, to try and, I suppose, give you some reality. I'm not trying to sell hopium here, just a dose of reality, just a little bit of sanity in YouTube. I know that somebody out there will have a much tastier, brighter, rosier thumbnail than mine saying, "You gotta buy or you will miss out. Oh my God, Bitcoin's going to $1 million. I know. I'll tell you why I know. Because I've got neon lights in the background. That's why I know." So look, I'm not taking the mick out of every YouTuber. I don't watch them, but the ones that I do see from time to time, they will say anything. They will say anything. The reality is nobody really knows, and it's all about statistics and risk to reward. Never really buy a resistance. You shouldn't ever really do that, to be honest with you. But if you were to get the opportunity to buy a dip on this, then the 4 hourly is offering a lot of dip opportunities all the way until we see 67,000. Again, it's only $1,000 away from price action right now. Those would be the dips to try for a trade. But let's recognize where we are, and as far as Bitcoin is concerned, we have gone up a lot. You should have been buying all the way back down yonder. I mean, it's ridiculous the amount of rallying that's taken place on this. 21,500 is the big buy for me, but that doesn't mean that there can't be more opportunities to buy Bitcoin for people who don't actually own it. The main reason I'm just focusing on Bitcoin today, right now, is that it's the main indicator for the entire market. And last night we looked at a lot of altcoins on the live stream, which is obviously what we do. And within that, there were some that were better than others, and actually a lot of them postured for breakouts and continuation. A lot of them actually in death crosses and looking for rejection and continuation in a downtrend. So look, the market is definitely on thin ice. It's flimsy as an overall crypto market, and we really need to work out what it is that Bitcoin wants to do the most. And as I've said, we're sitting between a tight range, an extremely tight range, more or less of $1,000, to help decide which direction it wants to go. Is it going to continue up and move up, maybe even to the top of this range and mid to higher $70,000, or is it going to make another lower high and carry on down? Only time's going to tell at this point, really. Only time's going to tell. And like I said on the stream last night, to the vast majority of the things we looked at, not all, but the majority, is that I don't consider this to be a range to be traded or an opportunity to really be taken across the board for crypto. It's probably better to be protective of all the gains that you've made. And let's face it, we've been trading altcoins since October last year pretty successfully. We've made lots and lots of percents. We'll just call them percents. We've made hundreds of percents, and we'd like to keep them, right? So look, there's not many markets in the world where you can make hundreds of percents like that so quickly and so easily in such a short space of time. It's been 6 or 7 months really, and that's been the reality. That's been our reality. So why try to make a few percents when you're looking to risk as many on the way down? So let's just stand back and recognize what it is that we're looking at here. Bitcoin's wanting to make a decision. We've got a halving coming round the corner, which in my opinion is a bit of a non-event initially, and then obviously the economic reality of the halving will become more evident later on. But for now, yes, hodl bags are perfectly fine. They are hodl bags. That's what they are. They're not to be thrown out at the drop of a hat because we see a small consolidation or potentially the start of a consolidation. That's not what a hodl's about. You ride the waves of volatility with those. But from a trading perspective, for new trades right this very moment in time, it's not really for me. If there was a gun to my head and said, which way do you think it's going to go? I would probably say it's more likely to go up. But is it going to make a new local high? At this stage, I couldn't say. I don't think it's appropriate to even try and make a call like that when you really, to put it simply, have not really got much of an edge. It is a guessing game. The trend is not clear. The trend is still an uptrend, but it's not particularly clear that an entry point exists right now. And obviously the risk for altcoins for most altcoins. Not all, because I still hold some altcoins. Don't get me wrong. In my trading account, I'm about 80% in cash now, so that should tell you something, that I'm a very much a protected and guarded position when it comes to my trading accounts. But there is 20% of that still in open trades, and I'm hoping that, even though that the odds are in my favour for uptrend and upside and continuation and more profit and more percents, I'm hoping that by you recognising that I am still 80% in cash now, reduced my exposure to the market over the last couple of weeks. I hope that sort of says it all, really. Never all in, never all out, but I am basically 80% out of the market right now. That should tell you something. Wait till the halving is kicked in and we'll see what effect that has on Bitcoin, and if it has a positive effect, which it doesn't often, to be honest with you. It's a bit of a non-event. All of that is priced in. But if it does, for whatever reason, because this time is different, have a positive effect, then yes, we can continue to trade this market. Remember, hodling is different. If you're a hodler, then that's fine. I'm also a big hodler, huge hodler. I've still got Bitcoins and Ethereums that I bought back in 2019. Never sold. Why would I? Epic positions taken back then. There's loads of stuff I have from back then, and even stuff I have from even earlier than that. So hodl is different. But trading, don't really see any reason to get too clever today. And probably not even tomorrow. We'll see. Closures again above these moving averages on a daily. We're talking, let's just call it 68,500. Closures on a daily above that should take us back up to the top of this range into 71,100. And maybe at that stage we do actually have a new all-time high. But let's just be very careful. It's not a call. It's an expectation, but not one that I'm willing to commit more capital to the market. 20% is good for me. Right, thank you for watching. Hope you have a nice day. Take it easy.